Rich Dad's Guide to Investing.
What the rich invest in that the poor and the middle class do not. Here are some notes that I will be reading of this book that was published in 2000, the year 2000 by Robert Kiyosaki. A great book that follows the Rich Dad Poor Dad book that many people know and are familiar with and associate with Robert Kiyosaki. But this book in particular goes more in depth into what it is that the rich people invest in. And here are my notes. I will read off my notes and let's begin. A quick side note, some of these notes include notes from quotes that I collected from Instagram, but most of them will be from the book. Let's begin. This was from Instagram. No matter how you feel, do it anyway. And this is from Grant Cardone, where he's talking about there's times where he doesn't feel like doing things. When people think that, man, this guy's incredible, he does so many things, and there's something he doesn't want to do, he does it anyway. Success takes an obnoxious amount of work. I think that's directly from the book, and I think that's a lot of people overlook that, and they assume rich people have it easy, and that they inherited the money, and that they didn't really work towards it. Know the difference between the rich and the poor's vocabulary. Um, the book talks a lot about vocabulary being an essential part of being successful. So, an example is that if you want to be a doctor, you learn all this vocabulary doctors use so that you understand what you're doing. And so, with investing in the financial sector, you gotta know all the vocabulary associated with investing so you are familiar and know what you're doing. And also, an important note is that you do not misuse the definition of each vocabulary word. That you use it properly and always know what you're talking about and how to use it. The investor is the asset or the liability. So a lot of people look at stocks like, hey, they're risky. But the truth is, the person is risky. The person should know what to invest in if they're educated, if they know their financial vocabulary. So it's the person that's risky, not the equity, not the financial asset, not the financial tool, not the financial instrument. Because some of these are instruments, they don't really do anything, but it's your job as the investor to know what to do and to be educated. So the investor is the risky one, not those financial tools. Investing is not a race. Everybody grows up differently, is brought up differently. So everybody goes through their own process and eventually reaches the success that they aim for. And just focus on being a better investor. To be rich, be on the inside. And what is meant by that is be inside a deal. For example, a pre-IPO deal. Like for example, Uber before it became an IPO and it was sold to the public, it had pre-IPOs where it was finding investors, $50,000 here, $50,000 there. Gary Vaynerchuk is a good example. He talks about it that he could have turned 50 grand into half a billion if he had invested, but he missed out on the opportunity. And that's what the book refers to as being an insider. The poor measure things in terms of money, and the rich measure in terms of time. The poor cling onto money and spend the money on trash. The rich just see money as a measure of exchange, a tool to buy time. Time is more important to the rich. So invest your time into the vocabulary, and the vocabulary will reap the rewards. They will pay dividends if you apply them. You need a financial plan. Either talk to a financial advisor that is highly reputable, or read a bunch of books that fit your situation. But have a financial plan that you can write out and maybe spell out every single day. Pay the price today so you can pay any price tomorrow. I think this was from somewhere on Instagram. I think Bradley Leah, or I think it was also um, some real estate guy, Brandon or something, some guy on Instagram. The aim of investing is infinite IRI. What that means is you buy something, buy an asset, and that returns you money forever, for the rest of your life. An example is property. You buy a real estate property, a rental. You rent it out for life, and it's paying you for life. That's infinite wealth, infinite ROI, infinite return on investment. It's never going to stop returning investment if it's in a great location, if it was properly financed, and if you have gotten yourself a deal. 80-20 rule. 80% of your results come from 20% of your effort. 90-20 rule. 90% of people own 10% of assets, and 10% of people own 90% of assets. Or 10% of people own 90% of the money, and 90% of people own 10% of the money. Sophisticated investor. This person has invest in an education, goes through experiences and experiences many things to grow, and then eventually it leads to excess cash. And a sophisticated investor doesn't have to be an accredited investor. An accredited investor just has a lot of money but doesn't really have the education, experience, or excess cash. Maybe excess cash, but they don't know how to use it. So a sophisticated investor knows things, is educated, and then throws themselves into a field of knowledge and experiences those things, like being in the financial sector, being in the markets, involving themselves in the mortgage industry, in the real estate industry, and then after gaining such amount of experience, they get good at it, and then now they have excess cash. Have your business buy your assets. So businesses have the privilege of buying assets before paying taxes. So essentially, they have more money to dispose of into their asset column, and that's how they grow it bigger. And with employees, the rest of the people, the 90%, they instead buy assets after they have paid taxes. So that's a drawback of being an employee, that you have to pay taxes first. You gotta pay the government first. So now you're left with less money to buy assets. Instead of just making more money, make more time. I think this is just a thought that I thought about. Try to make more time. Like if I work my butt off all the time, yes, I'm making money, but my time is the one that's more valuable. So find a way to make more time to invest in my vocabulary that then pays dividends. By dividends, I mean just some type of reward, and I find a great opportunity. You know, investing in your education, investing your time in education or money in education lets you find great opportunities where the reward is higher compared to the risk. You don't need money to make money. This is a very important thing that is emphasized, and a lot of people have the misconception that you do need money. But that's poor people's thinking. The rich think in terms of creating money, printing your own money, not illegally, but creating your own money through your vocabulary. You invest in your vocabulary. You know how to raise money, either raising money through investors, not your money, but other people's money. And then because you are so educated, experienced, and then you found excess cash through investors, You may have your own money, right? But you're not really going to use it. You could use other people's money. It's more powerful to work as a group. But thanks to your vocabulary, you're able to work all that money into an asset. Investing is a plan. Investing is not really something an action. It's a plan. Investing is different for everybody, but investing it should be a plan. It's not a tool. It's not an asset. It's a plan. And you plan out your investing. It's a process of executing on that plan. You could write a plan on how you're going to reach a certain amount of income, of passive income, of how you're going to acquire such amount of rentals, how you're going to build the money or raise the money for acquiring those rentals. So investing is a plan. Increase your financial vocabulary. This is what makes you rich without money. Never misuse the definition. And this is basically the same thing as before. Increase your financial vocabulary. And yeah, this is what makes you rich without money. So this refers to you don't need money to make money. And never misuse definition, as I said before. Don't get attached to the financial vehicle. In other words, don't just stick to stocks to generate your income. Don't just stick to a little business that you had forever. Don't get attached to the tool. You can also diversify, or how about you get capped? You get capped at how much money you can make in that business, and now you can sell the business and transfer into something more unlimited, where the cap is much higher and you can make more. For instance, you're doing residential property and you reach a point where it's like I can't really borrow more. It's more limited. It is more cumbersome, and then you go from residential to apartment complexes or commercial buildings, businesses. You know, and the opportunity is bigger. The potential is bigger if you know the vocabulary for that section. If you invested in your education experience to gain excess cash. Plan 3 generations beyond your death. So your investment plan should go beyond 3 generations. Don't just invest so that when you die, all the money is gone. How about you invest so that so much money is left over that that money goes to charities and so on. Words form thoughts, and they become realities, and they become life. I think this was from Brad Lee from Instagram. Becoming rich is just like following a boring cake recipe. People don't follow the recipe or formula simply because they get bored. And I think this is true. People want the excitement of like putting money into a stock and like, hey, it's gonna go. It's like it's not a lottery ticket. If it's a lottery ticket, just play the lottery. Go to your local liquor store and buy your lottery ticket. Yeah. But investing is a plan, something that is actually calculated. It takes math, it takes planning, it takes adjustments, it takes editing, it takes work, and that's what turns people off. It's like, I have to work through it, and they think that rich people just get lucky. That like, he got lucky, he got rich, he got lucky in an investment. No, they worked, they studied something that led to that opportunity that they got. That pretty much was their break. So the recipes are out there. You just gotta follow them, even though if they're boring. Turn a liability into an asset, or one that is in the process of becoming an asset, and only you know it would be a nice, good idea to buy it if it will be desirable after it is fixed. You see a messed up property, for example, and if it were to be fixed, will people still desire it? If yes, the answer is yes. there you go. You get a good deal on a broken property, you fix it, and like now it's worth a shit ton. People are scared to fix a broken property in a good location because it's gonna take a lot of money. But if the payoff is ginormous, it's worth it. So yeah, according to Rich Dad, according to Robert Kiyosaki, he likes to find broken properties, ugly places that could be turned into an asset. There is a deal. There is a deal every day, but you have to be prepared. Otherwise, you don't see them. I see opportunities, deals in the stock market. There's deals in real estate, deals in business, deals in commerce. But for me, deals are in the stock market. And yes, if I'm not prepared for it, I'm not gonna see it. Another important thing is convert earned income into passive income. I work. I'm a W-2 employee. I do YouTube videos for fun. But I need to learn and find a way to take my money from my paycheck after it was taxed. So what? Find a way to convert whatever's left over into passive income, either through stocks. I did buy a car. I put it out to. I don't know if it's gonna sell. If it's gonna rent out. Who knows? We'll see. It's there on Turo, hopefully. Um, Excess cash, money you can afford to lose yet still be able to profit from the loss. This was a confusing one. I don't know if profit from the loss meaning you gain the knowledge. I guess you do gain the knowledge, but at the same time, you know, excess cash should be handled with care. You know, excess cash. Prior to having excess cash, you gotta have the experience and education where you want to put the excess cash. And I may get ahead of myself, but a good point that it was brought up on the book is that before you acquire any money, know what to do with it. Otherwise, you have money and now you're trying to plan what to do with it. You're gonna lose it. I've lost thousands of dollars on the stock market because I would just gamble. I should have bought lottery tickets. I would have better odds of winning. Possibly, I don't know. But I did gain knowledge and all that stuff. Yes, the hard way. I could have bought a course that could have taught me way better. I could still buy a course because I'm still not profitable. And yeah, I did have not a lot of money, but like compared to like my situation, like my income, I did save a good amount of money. I saved like 40 grand, but now I'm down to like very little. And I should have had a plan on how to really make it profitable. But now, yeah, I don't have that much money anymore, but now I have to prove that I can turn a little bit of money into a lot over a long period of time and be okay with that. Because if I can't do that, what makes me think I can turn a big chunk of money into a lot? Like I'm just gonna lose it. All right, return of investment versus return on investment. Return of investment is that you get your money back. How fast are you gonna get your money back? If I put 50 grand on this property, how fast am I gonna get that 50 grand back? Return on investment is just like how much per year? How much per year? Yes, you could also calculate return of investment, but return of investment is pretty important because let me get my money back and basically make it free by a certain amount of time. Like in 3 years, I get my money back. So every other year, it's like my money, I already got it back, it's secure, and everything else is just like passive, which is cool. You need a team of full-time professionals that you pay with pre-tax dollars. That's an amazing point. I didn't think that was like much of a thing, but yeah, Rich Dad's advice is that have a team of professionals, full-time professionals that you can pay with pre-tax dollars, which benefits you because now you write it off. You pay your employees who are helping you be a great business. That was just the first half. Now it's time for the other half. Invest as a team, not out of self-interest. So when you're investing and you find a group of people that you're investing with, Ask questions that pretty much show the type of person you're dealing with. If they say like, "Hey, I want to get paid this much," now you know they're just in it for the money. They're not really in it for building something great. You could ask them, "Can you afford to work for less, but you will reap the rewards if you stick with us, and we will pay you some return off part of the investment to you if you're willing to work for free. Not free, but like for a little bit, for like 5 years or something like that. Are you willing to wait? Are you a person that is long term thinker rather than a short term thinker who just wants money and thinks like an employee?" The BI triangle, that's something you gotta Google. BI triangle. It is very advanced. It's a big business. So like all these is for big business. I'm not even there yet, but hey, this book is eye opening. I think it's a little bit better. Same level as, for sure, same level as Rich Dad Poor Dad, the original book, but this one is next level. Start a business for the millions, not the 250K a year. A lot of people go into business and they just make 250 a year, 250,000 a year, but they're stressing the heck out. How about instead you make millions, hire great people that you pay 250K, and now you're just living passively because you were willing to spend the money to gain time, to gain your freedom. That you made a business that generated millions so that you don't have to work so hard. You know, the whole point of starting a business was to be free, to have excess cash. But if you're just working for and starting a business for 250K, you're gonna end up being an employee. You're gonna end up being like the rest of them, a high paid employee. But sure, 250K temporarily, if you're there, find a way to scale. I suppose I'm not even there, so I'm not judging. I shouldn't judge if that's how you took it. Get a job in sales. If you're doing sales, you're gonna learn a great skill. You're gonna build thick skin in business that's needed, and yeah, of course, you're gonna make a lot of money if you're good at it. It will reflect, the amount of money you make. It will reflect how good you are in sales. Um, don't argue with people who ask for advice but don't like your advice. Self-explanatory. Start any business to change your mediocre mind. So if you have a business idea, start it. I would say something small, but I don't know how big or small. I think it was like any small side hustle. Start it to challenge your mind. Your mind is doubting you right now. It's like, don't do it. Wait till you have money. Wait till you do this. Start a website. Start a blog. Affiliate marketing, stocks, YouTube channel, Turo, a contractor, fix iPhones. I don't know. What else stuff on Alibaba, AliExpress, Shopify, Amazon FBA, and started. So to challenge your mind, hey, like I could do it. Even if I didn't make money, I know at least the process. I'm getting better. It's a step forward. You're not gonna be great from the beginning. Just fuck up first. Sorry, excuse my language. Mess up first, fail, but don't quit. Fail, but don't quit. Thick skin is vital. Yeah, thick skin is vital. Very vital. You need your part-time business when you want another part-time job. So as soon as you start thinking, hey, I'm doing this job, I need more money, so let me look for another part-time job. As soon as you start thinking that, tell yourself, how about instead of looking for a part-time job, I start putting that time into myself, into a side hustle, that business. So you have time to work for somebody else, but you don't have time for yourself. No, you have time for yourself. So instead of working really hard for low wages somewhere else, work for yourself. If you're gonna work somewhere else, at least be a self-contractor. Do something that is business-like and that you could scale. Um, Never take a job for money. Take a job for the long-term skill you learn. That's very important. That's something I'm not doing right now. I'm just taking a job for the money. Taking a job for the long-term skill would be something like real estate, mortgage loan officer, a mortgage loan originator, something in the real estate industry, right? Because that's what makes people millions, or at least well off. So I'm messing up badly on that aspect. Um, Business buys assets, pre-tax, and pays taxes on net income. That's the amazing part of business. Pay all your assets before you pay the government. Now the government gets a little bit because you have a little bit left. But so what? You have a little bit left because you already used it up for yourself, for your business, for a business that's going to grow, that's going to hire people, and that compounds. That tax money, that money that could have gone to taxes, compounds in your business. It does better in your business than it does in the government. The government misuses the money. They're corrupt. They don't know how to manage money. They just waste money on employees, and they don't get shit done. Let's be honest. Business. All right. Future PE is what you should consider. So, like, if you're looking at PE ratios, how about considering what would the PE ratio look in the future? What would the PE be? Price per earnings. You know, like, are earnings going to increase in the future? If you anticipate that like 10 years from now, that's probably a good stock. And if it's low right now, but it's probably going to be really high in the future, that's probably good investment. I'm not a financial advisor, but in my view, that's how I see it. Like, hey, they're probably gonna make a lot of money in the future, but people are not really paying attention to that. Yeah, I'm gonna play it right now because then people are gonna realize late, and then it's gonna, blow up in a good way. All right, Cash Flow 202. That's a book. That's a game that Rich Dad has, and I'll probably buy, which teaches about, I think, the stock market. You have to be a great. You have to be great as well. You need to find your entrepreneur spirit. Ideas are not good by themselves. So this one hit hard. It's difficult to swallow because one doesn't know they're great. I don't know if I'm great or good enough. I don't know yet. I need to work, prove myself. I gotta put in the time and effort. I have to work to be great. I have to be great. I have to make myself great. I'm not great just by default. And that's an important thing. Like, I could be great. I just have to work towards it. Not just anybody's gonna jump in and get it done. You have to build yourself into a great person. And then find that entrepreneur spirit, that spirit that drives you, that's not scared of taking chances and opportunities and calculated risk. Non-entrepreneur, entrepreneur, an entrepreneur looks at the potential of a company, of what it could be, rather than like they're not in it to not lose. They're in it to win. Like, hey, we're gonna do this because we want to win. We're doing it to win. We're not doing something like, oh, we're doing this so we don't lose. No, they're doing it because, like, hey, we're going big. We're seeing the potential rather than the drawback. The drawback, it's part of the game. If it happens, hey, you will learn something. You will probably lose 4 businesses before you hit something or more, but don't quit. Okay. Practice your financial literacy. Read financial statements. I think I've tried this. Read financial statements, or the 10Ks of companies. It's very long. It's crazy. Practice your financial literacy. Yeah, read through vocabulary words. I used to do that a lot to learn my English, but financial literacy, I do get a lot from stocks and stuff. I did learn a lot, but there's still more I can learn about the ratios of companies, like PEs and forward AP, Schiller ratio. I don't know. All those things are pretty market cap, ROI, random stuff like that. I should write that down. Financial vocabulary. Um, Create assets instead of buying them. This is crazy. Create assets instead of buying them. Wow. Invent your assets. What's an example of inventing your asset? An example was when Robert Kiyosaki, in his first book, The Rich Dad Poor Dad. I don't know. I think that's his first book, but he took magazines that were used when he was like, I think 7 or 10 years old, that you would normally go to the trash, but he said, hey, could I use them and rent them out and like just use them and read them? He instead converted them into passive income by renting it out to other kids in the neighborhood. 10 cents for every person. They could read as many as they want, and it would be a bargain, but they would still be making money because it's such a great thing. They converted trash into an asset. Amazing. Rather than buying already a business. So you build a business that's creating an asset. Create a service. Confront your weakness. So all of us have weaknesses instead of, and a lot of us are like, hey, let me just focus on my strengths, avoid my weakness. How about you tackle your weakness? Like, hey, I'm weak in this area. I want to improve in it. I want to improve in this area because imagine if your weakness now becomes your strength and you have both strengths, your strength and your previous strength, and now what will be your new strength, which was your weakness. Now you're like twice as strong. Yeah. You need excellent communication and sales skills and marketing. And then you can get that from becoming a salesperson, somebody who sells. Very important. The thought process is the asset turning trash into cash, lead into gold. So the thought process, the thoughts, the ideas, the ideas is the asset. What comes out of your mind is the asset, yes. The thought process, the ideas are not good alone, but the thoughts coming from somebody who is entrepreneurial and has an ability to take action is an asset. And then turning it in from trash to cash, like Robert Kiyosaki, turning those magazines into an actual business. Raising capital is an entrepreneur's most important job. This is something that threw me off. I'm like, an entrepreneur raising cash, like man, that sounds like not something I would be able to do. But if you're a salesperson, if you learn sales, you learn how to sell, how to market, and improve your communication, you will find people who are willing to invest in you. For example, Jeff Bezos went through 60 investors, got 20 of them to invest in him 50K, so he raised $1 million from 20 investors out of 60. The 40 that said no regretted it, about 40, something like that. And then now, if suppose those, so like 20 of them said yes for 20% of the company, if they each kept their investment, it would have been like 10 billion each person. 10 billion each person. That's a rough estimate. What I mean, maybe like 5 billion, something like that. But dang, that's crazy. Um, yeah. So like he raised money. Jeff Bezos raised money. Um, Steve Jobs, Elon Musk. Elon Musk, I don't know, maybe paid it through PayPal, but like they all borrow loans. They all borrow money. Venture capitalists, like they raise money because they have created an asset, something from trash to cash. It's a service. It's a product. It's a crazy cocktail of knowledge turned into something good for the community, for the world. I don't know what I just said. But write and review your goal every day and believe it. That's something I'm failing to do. I'm failing to do that, really. I'm failing. I'm failing big time. So that's something I should be doing right now, is focusing on also writing my goal. Write goal, do small goals. All right. Why work so hard for money when I can invest my own? Why work so hard for money when I can invent my own? Sorry, invent my own. Why work so hard for money when I can invent my own money? And that invention comes from your ideas turning into thoughts, and then turning them into an asset, turning them into a business. That's how you invent your money. Jeff Bezos invented the internet into his money. He manipulated, hired people, did something with the internet, and now there's a huge online Walmart, basically. He turned Walmart into an online thing and called it Amazon. Amazing invention. Well, not really invention, an idea he converted into an even greater idea. Due diligence checklist. Before finding an asset or trying to buy an asset, have a due diligence checklist to qualify the asset, if it's a good deal, a bad deal, if you're going to go through with it or not. Toastmasters to improve your speaking skills. That's something I should consider, something I haven't written down. Let me see. Toastmasters. All right. Ephemeral and leverage. Ephemeral, look it up. Ephemeral. It has something to do with leverage. That when it came to building a business, you need ephemeralness, leverage. A great idea backed by a great plan with great people that are competent. They use the leverage to capitalize on a great opportunity, like Amazon, for example. Again, they have a great opportunity of turning an online app, Walmart, calling to Amazon, using all this capital to create the supply chain, the network, the infrastructure, the application, the website. That is leverage at its finest, and now it is worth trillions of dollars in the stock exchange. His net worth is amazingly huge, but he doesn't really focus on that. He's customer centric. He focuses on innovation, and there was another thing that he focused on, which was what was it? What was it? I have it right here. Long term. Thinks long terms, consumer customer centric, and inventive. All right. Money makes you stupid. Learn to say no to yourself. So a lot of people who amass riches through a good fortune, either through the stock market, they put the money in the good stock, or they bought options. And just in stock terms, well, let's say in business, but the easiest one is stock terms. People could put 5,000, turn it into a million. If that happens, if people get stupid and want more instead of having the knowledge of what to do with the money that they obtain, they throw it away into bad investments and literally lose the money faster than they can invest it. So it will make you stupid, and you will start buying dumb shit because you think you made it. You want to buy your Rolex, you want to buy your car, your Ferrari, and it's stupid. It's retarded. That's the dumb thing about. That's the crazy thing about what money does to you. It makes you stupid. All right. So this goes with the thing that I said previously: is know what you will do with the money before you get the money, or else you might lose it. I said this already before. If you want to be rich, you need to know the illusions, hopes, and fears of both sides of the coin. And here I have a little bit of what I think I threw it away. I think I did throw it. Took a picture of it and threw it away. But essentially, for example, the fear of the poor people is like, hey, I want security and I don't want to lose it. I fear getting sick and not having insurance. An illusion is that, oh, maybe I'll win the lottery. For rich people, an illusion is like, hey, I'll get rich quick. A fear could be like, hey, like I'll never be wrong. I don't want to be wrong, but that's part of the process. Or fearing working for the rest of their life. They don't want to work for the rest of their life. That's fear. Fear of not getting the freedom that they pretty much working towards. Use your expense column. Use your expense column. So use your expense column to your benefit. And this from businesses, they use their expense column to reduce the taxable amount of money, the amount of money that's taxed. So yeah, use expenses appropriately, lawfully. Use a CPA or whatever. Follow the law. You know, low income and high expenses can make you rich. And this goes back to the previous point. You could have low income that's you know not taxed a lot. High expenses, which reduces your low, makes you have low income. So now those high expenses are actually assets. If you learn how to bring the expenses back to the income column, that's what makes you rich. You know, your expenses are high, but those expenses are have returns. They will pay dividends. Poor people want to bring their expenses back to the no, sorry. Poor people want lower expenses and high income, but they spend their income and on dumb shit. And that's true. We're like, I want my expenses to be low and high income. But high income gets taxed like crazy. They what? You want high income just so you could pay it to the government? And then what's left, you end up, yeah, you're saving on gas, you're saving on electricity, but you end up spending that money on dumb stuff that doesn't pay dividends. You enjoy the money right away instead of investing it. That's okay, you do you, whoever's doing that, it's fine, fine. Enjoy the money. Just be okay with it. Don't have regrets. Maybe I'll have regrets. I don't know for not spending the money how I should have. Who knows? We'll see. Ask what percent of my expense column goes back to my income column. It's a good question. For me, none. Nothing. Maybe the money I lost in the stock market, I don't get taxed as much. I don't know, but like I'm still an employee, so not much. Pretty much zero goes back to my expense column. I don't have a business. I maybe Turo, maybe Postmates, but I'm still a self-employed person, and they still don't get that many benefits from the tax code. Sales and omnipresence, Grant Cardone. When you're doing sales, be omnipresent on the internet, on Facebook, on billboards, I don't know, networking, phone calls through your neighborhood, word of mouth, be omnipresent. YouTube. All right, we're getting close to the end. Look in the mirror. That's who's responsible. That's the responsible person for where you are right now. Look in the mirror. That's who it is. Don't blame anybody else but yourself. Have new economy ideas rather than old economy ideas. Example, new economy ideas is involving the internet, making money through the internet, versus trying to start a factory and doing moldings and old industrial stuff. Example is Amazon is the online Walmart. Shopify people are selling stuff, their own stuff, without Amazon. Moore's Law, I don't know, I just put that, you know, that hardware technology is getting double the strength every 2 years, I think. And that's why, you know, new economy ideas are so important because that's pretty much where we're heading. We're using technology at a fast pace. Last thing, imagination over knowledge. Imagination allows you to be inventive and create things rather than reinvent the wheel or using something that's already there. You could, but if you do that, be inventive and make it so much better. Again, Amazon turned Walmart into a very creative idea of just putting it on the internet. And it's such a simple idea, but he used his imagination on how to be pleasing the customer. He will fail at some of the inventions, but that's fine. It's part of the process, and that's how you learn and move on and apply other ideas. Never quit coming up with great ideas. And yeah, that's basically it, guys. That's the end of the video. Hope you like and subscribe. If you found this video to be too long, well, that's books, man. This is a summary. If you read the whole book, which is I think 15 hours long or 18 hours long, um, you would appreciate this video summary. And I would still recommend looking at the video because the video comes with great mindsets, ideas, and it's totally worth the read. Um, if I find the link, I'll post it in the description. And I'll see y'all in the next video. Make sure to subscribe if you haven't subscribed.